Welcome back to the channel. Please, if you are new to this channel, please subscribe to the channel and then like this video and share the video with your friends and your loved ones who wants to learn how to trade forex. We are on the journey of our forex mastery program, SMC, and today we are looking at order blocks. In our previous video we looked at what we call fair value gaps or imbalances and how you can trade them. And if you haven't seen the video, please go to the channel and check the previous video before this one and you will have it there. We are looking at order blocks, and almost all SMC traders trade order blocks, and today I'm trying to explain how you can trade order blocks to profitably and professionally. When we say order blocks, we talk about areas of buying and selling orders, okay, and they are always found in what? Demand and supply levels. We did demand and supply in our previous two videos and you can check it out. Order blocks are found in what? Demand and supply levels, okay. And to know that this order block is valid, it must have what? An imbalance or a fair value gap. It must lead to what? To a break of structure. There must be liquidity and it must be unmitigated, okay. They are only for first time use only. Order blocks are for first time use only. So I'll take you to the chart and then show you how you can mark those order blocks candles out and how you buy or you sell using them. Okay, as you can see, these are the conditions we are looking at to mark an order block. We look for a supply and a demand zone, and we look for fair value gaps. It must lead to what? To a break of structure. It must be liquidity. It must be what? Unmitigated. That is, it must not be tapped in yet. Okay, it's only for first time use. And we mark the last candle before the impulsive move, regardless of the candle. So the candle can be blue, it can be red, but we mark it before the massive move, and it must lead to a break of structure. It must have a fair value gap, and it must be unmitigated. So looking at this candle here, okay, looking at this place, as you can see, this candle, this blue candle, you see that when the market formed equal highs here, it started dropping and it took out this swing low. Market took out this swing low that led to the break of structure here. This swing low was taken out, okay, and which means we have broken to our structure, okay, which means we have broken structure, as you can see from here. So once we have broken structure, that's our first condition. It must lead to what? To a break of structure. We look for what? A fair value gap. You can see that we also have fair value gap from here, inside this one. From this candle to this candle, we have a fair value gap. If you don't know how fair value gaps works, you quickly check out my previous video, the video before this one. You get to understand how fair value gaps are marked. So you see that from this candle to this candle, there's a massive gap, okay. This is the impulsive or the massive candle, and this is the fair value gap or the imbalance or the inefficiency that is created in price. So we mark that one out. That's our second condition. The third condition is what? It must be unmitigated. It must not be tapped in yet. So you can see that this last candle before that massive candle has not been mitigated. Market has not tapped in yet. And what again? We have liquidity. Now liquidity, you can see that we have this swing high. We expect price to take it out, okay. There are a lot of traders who took sell positions here and their stop losses will be here. So we expect market to take out the price or their orders here and then tap into it. So this becomes our liquidity point, and this becomes our fair value gap. This is our order block, okay, and this is our break of structure. So we have all our conditions met. So what do? We put out our sell tool. We put our stop loss a bit above here, and we put our entry price, our sell limit, and we target the previous what? Swing low, okay. We target the 100% retracement level, and let's see how price reacted. You see, can see immediately price got into it, price reacted, and then it continued. Okay, as you can see, you see, and our take profit is what is smashed. Okay, so all the conditions have been met, and we took our sell position, and we are there. So there's a fair value gap from here. This is our fair value gap. This is our liquidity. This is our order block. This is our break of structure, and all the 4 conditions we are looking for is met, and we took the trade. Let me show you another buy scenario and see how you could have possibly taken that trade and made money from it. This is another trade scenario, and you can see that from here, you can see that we have broken structure. This is our first condition, and we also have a gap here from this point to this point. That's a gap. You can see that there's an inefficiency there. There's an inefficiency there. Price created an inefficiency or a gap here, and you can see that this is our last candle before the massive move started. This is our last candle before the massive move. So you can see that we also have our liquidity point here. From this point, a lot of traders would sell. Those who trade fair value gaps. Fair value gap traders would have entered here. They would have entered here. Fair value gap traders would have entered here, and their stop loss will be somewhere here. And although they would have made money, but those who would have hold this trade for long will still be inside. So market will come back to work to take out their stop losses, their liquidity, as you can see here, to take out their stop losses and tap into the order block, and what do we have? We have our 100% retracement hit already. So this is how you can also trick this sell trade. You can see that immediately we took the first trade, the second trade followed. You'll see that they are all in line with the trend, and they are all satisfying the conditions. They all have fair value gaps. They lead to break of structures, liquidity for first time use, and the last candle before the import, regardless of the color. The last candle can be a bearish candle, it can be a bullish candle, but it is the candle right after the massive move. Let me show you buy scenarios and how you could have possibly traded the buy trade setups. Okay, this is another buy scenario, as you can see from here, and you can see the price has been moving uptrend. And you can see that the last candle that led to this break of structure, this is a break of structure here. The last candle that led to this break of structure is this candle. And you can see that right after that candle, the massive move started. The massive move happened from this candle to this candle. That's the massive move. That's our fair value gap. Okay, that's our fair value gap, and all the conditions we are looking for. Number one is what? Fair value gap. The second point is what? Might lead to a break of structure, which we already have here. The third point is what? It must be unmitigated, and liquidity, and the last candle. So you can see that we have all these things. And if you go to the lower time frame, you can see that this small candle here, this point, this area here, a lot of people took their buy entries here right after this engulfing candle. So their stop losses will be around here. So market will take all of those stop losses and then will continue. So that will be our liquidity point. And you can also see that from here. From this point, let's go back to the main time frame we're using. Okay, from here to here, that's our fair value gap. So we quickly put our buy entry here, and to be very safe, you put your stop loss at the end of the demand area. You know, this is a demand area, so we put our stop loss right below the demand area, and we target the 100% retracement. This trade would have been like 1:2 trade, or you could have targeted 1:3 if you want. And let's see how this trade played out. As you can see, we came right into it, and then we started moving up. Okay, and we started moving up, and right after this trade there was another trade, the same conditions that we look for. You can see from here, let me zoom it out for you to see. You can see that there was a break of structure from here. We have broken structure. Okay, we have broken structure. The last candle that led to the break of structure is this green candle, and we also have a gap from this point to this point. That's our fair value gap, and we could have easily taken our entry here, although this thing didn't have liquidity, but we could have still taken our trade from there, and we'll target the 100% retracement. This could have been like 1:1.5, which I don't always recommend, but you could have taken this trade to add more positions, and you can see it actually went in that direction. Okay, so this is how you can trade for order blocks. You just need to have these conditions in memory. Fair value gaps leads to a break of structure, liquidity, it must not be mitigated, and you just look for the last candle before the impulsive move. The last candle, it doesn't matter the color, it can be bullish, it can be bearish. So once you have these conditions, you are good to go. Okay, so this is how you would have traded order blocks profitably. You can see from here, you can see how the order blocks have been played out. You can see this is another scenario here. From here, I don't know, my cursor is freezing. From here, from this point, you can see this was our liquidity sweep. This was our liquidity sweep here, and this was the last candle before the impulse, and it also led to a break of structure from this point to this point. I don't know, my cursor is very bad. You can see that we broke structure from here. So we have all the conditions here. We have all the conditions we are looking for to take our sell entry. So you can backtest it out. Okay, you can try it on your own screen. Just use the conditions. Just write the conditions I have given you down, and you look for them one after the other, and you will find them. You will find them. You will find them. This is another trade you could have taken, and even here, but this trade would have it have moved a bit in your favor, and then it would have got reversed. So that's how order blocks have been traded. You can see I actually trade order blocks. My strategy is based on only order blocks. So I just look at the conditions in identifying an order block, and I'll trade it. You can see from here. If you have any question, if you don't understand anything, please put it in the comment section, and I can make more videos for you to understand it better. Until then, I'll see you in the next video.